You're watching The Language of Business with Greg Stoller.
Bob Goodof not only sticks with things for the long term, but he's also a pretty energetic guy. Maybe that's because he's worked in the energy industry as an analyst for investment management for over 30 years. Quite a long time. His areas of specialization in terms of sectors are oil and natural gas, renewables, and chemicals. He also knows a thing or two, or three or four, about risk assessment, both from a qualitative as well as a quantitative basis. Bob, welcome to The Language of Business.
Thanks for having me.
So, who reads your analysis that you spend so much time producing?
I work for an investment managers who basically invest money for clients. Therefore, my research is mostly used on a captive basis. My client is the portfolio manager. My job is to understand the fundamentals of an industry, understand the managements, and look for change, particularly which might be misvalued in the marketplace, and use that to select stocks.
And why would someone side with your opinion over those of other people, etc.?
Well, within the firm, hopefully you're the expert, and hopefully you've developed a track record of credibility, which usually comes from being able to assess the environment for your industry and being able to select stocks which outperform. Ultimately, if you don't outperform, the firm loses assets or you lose your job.
Now, how did you fall into oil, gas, renewables, chemicals, etc.?
Well, I was an engineering undergrad in material science, and my first job was in the chemical industry. I did 3 to 5 in Midland, Michigan, and then with Dow Chemical, and then moved east, came back east to work in the plastics industry. As a result, when I went back to business school, I had a little bit of enough engineering background that it was a natural fit. While there are lots of analysts who are not trained in the industries they cover, it just seemed better to me because I learned more about the industry. I understood more about the questions to ask.
After having focused on the same industry sectors for so long, have you been able to effectively produce positive and negative opinions, or just on the positive trends?
Well, no, there are things you like and things you don't like.
So what's an example of an industry trend that you don't like?
Well, it's so difficult to overcome the publicity of things like fracking, which has negative connotations, but which when you study it, there are reasons why there should be good practices. However, sure, there's also probably a very good history going back into the 50s of successful fracks. That doesn't mean that they shouldn't be regulated to some extent. However, I think it's just been very difficult for the energy industry to overcome the negative headline.
How do you take industry trend analysis, however, and then use that to either assess risk qualitatively or quantitatively?
Well, as we say in our industry, the future doesn't necessarily relate to past performance. However, fundamental trends of industry are a starting point for understanding what's next. Even the energy industry didn't understand 5 to 10 years ago the opportunity they had in the United States. However, it seems clear through repeatable discovery of new resources in this country and successful exploitation that there is a tremendous amount of energy. So you do have to be skeptical. You do have to analyze, but and you never want to draw a straight line, but you do want to have sound reasoning to indicate to you that there's an opportunity for one trend or another to continue.
So now you write this for your investors on either the buy side or the sell side. Mm-hmm. How do they then integrate that into their decisions? We've talked about assessing the risk. Now how do they actually integrate it into a buy, hold, or sell decision?
Well, a portfolio manager typically has a style. He may be a large cap manager, he may be a value manager, he may be small cap or emerging growth, he may be global. And so he's looking for a certain kind of equity to fit his style. It might be a small company with lots of potential. It might be a company that's fallen on hard times, which may have turnaround opportunities. And so as the analyst who covers the industry, my task is to understand enough about the different kinds of companies that he might want to invest, and also understand the fundamentals and be able to search for companies which might, again, fit.
So if you had to crystallize how to assess risk, what are the first 1 or 2 thoughts that come to mind?
Well, covering oil and chemicals and so on, we've been used to lots of volatility. So the first thing you have to understand is things change. As we say, after so many cycles, history doesn't repeat itself, but it rhymes. And the task is to understand how good or bad things can get. Scenario analysis is a great way to do this. Being a longer-term investor, I tend to do a lot of cash flow analysis. And when you run cash flow analysis, you can create and then evaluate different scenarios. You can change discount rates. You can change the effect on business cycles on the ultimate business, the effect of a dry hole or series of dry holes on an energy company, oil company.
What sectors do you think are attractive in the energy industry these days?
Well, I still think that the U.S. natural gas opportunity is sustainable and longer term, but what I really like is the customers. The customers are benefiting from cheap raw materials relative to the rest of the world. You would not believe how many different companies from different interesting countries are coming to the United States looking to invest because they can take advantage of cheap energy. They're coming from the Middle East, they're coming from Asia. And so the opportunity for secular growth of the economy based on relatively cheap and abundant energy is dramatic.
Do you think the risk-reward trade-off is worth it by going outside U.S. borders?
I think it probably is, looking at valuation. I have done less work in my career on international, although I've visited a number of companies and countries around the world. But there are obviously changes in psychology which have made probably the Asian markets probably more attractive than unattractive over a longer period of time.
Great. Thanks, Bob.
Sure.
Bob Goodof, successful financial analyst for the energy industry. Ever wondered how venture capitalists really think about risk and how they look at it from both a qualitative as well as a quantitative perspective? We'll discuss this and many other topics with Christopher Mirable. He's coming up next on The Language of Business.
Do analysts and investors feel the same about risk? Find out when The Language of Business continues.